Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. The recent bump and run reversal rally here had been due to a mid-May to late June reverse head and shoulders bottom pattern, with the market easily reaching both the primary and secondary targets for this pattern. The reverse head and shoulders bottom has a bright green neckline, currently 301.30, a little below the market, which was visited in late June and rejected higher. The most recent action saw a break higher in late June, forming an early June horn top, and then forming a mid to end July bear channel, from which the market exited out of the top through the upper bear channel line just by going sideways 3 weeks ago. Prior to that, the topside had been capped by the slowly declining gold long moving average, currently 310.05, as well as prices dipping below the strategically important 50% Fibonacci line of the May 24 to February 25 move at 310.80, plus the nearby old May 2011 high at 309.90. However, that only worked for so long, and we saw over the last 4 weeks prices form a small dark blue bull channel, currently 315.05 to 340.20, riding higher to now test again the one thing that had capped prices back in early July, if you look at my daily chart. One could say it was the 50% Fibonacci line of the November 21 to February 25 move at 334.80, and that would be true, but if you look closer at my daily chart, especially back at the high in October last year, the bright red September 25 to date downtrend, currently at 344.45, you will see what seems to be a far stronger bearish pressure, and one to most definitely watch. And something else I'd like once again to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 72 weeks ago, well over a year, and I went at the time to my longer term charts, the monthly charts, where we can see some interesting insights. You see, on my monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year, 2012 to 2024, very large reverse head and shoulders bottom, a bright red neckline on my chart, currently at 279.90. The break higher over this neckline reached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, and over the course of 2025 and now into 2026 formed a very, very, very large double top pattern, an Adam and Adam double top, based on that bright red neckline. Now, when the market breached and broke below this bright red neckline, I felt obliged 11 weeks ago to lay out some targets below for this really, really, really long-term pattern of a primary target X down in the 184.90 zone, amongst the congestion of 2023 and early 24, and the 2020 to date uptrend, currently at 185.80, with a secondary, harder to reach, much harder to reach target X1 down in the 132 even zone, on top of the congestion from late last decade and the start of the 2020s, plus the shallower 2019 to date uptrend, currently at 132.85. Now, I've always said please bear in mind that these are long-term, possibly very long-term targets below for this double top pattern, and that would be fine normally, except that in June the market moved up significantly, back up over the bright red long-term neckline, with something important that I have warned about, a monthly key reversal up. We carried on higher in July and now higher still in August, such that it threatens both target X and target X1 below. I said I would wait until we closed July completely to fully comment, but it looked like the move lower below the bright red neckline might have been a false break, and if we exploit that move higher in August, which now looks very likely, then I will downgrade this longer term commentary I may still keep those downside targets on my longer term chart, just in case prices do eventually turn back lower. As this is a longer term chart and one where 3 months of moves higher are not as significant compared to such moves as we've seen on the daily chart. London coffee. 61 weeks ago, so well over a year ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition was important as it started back then to press down, magnifying the subsequent breaks lower. The moves lower had enough of an impact on me back then that I drew an important parallel big bright red bear channel based around it, currently 2613 to 3580. It's quite a wide one, but that's what it looks like. 8 weeks ago this bear channel was ruptured on the upside, but prices have not sufficiently lost contact with this breached bright red upper bear channel line for me not yet to truly call the bright red upper bear channel line properly broken. Additionally, the market has not let go of the companion to this downtrend, the declining gold long moving average, currently at 37.47. All in all, it should have been a seismic event, and it started that way, but prices soon ran out of steam and created instead a June to late July dark blue ascending expanding wedge pattern. This looked good for the upside targets of a primary target X up in the 45.29 area, with a secondary harder to reach target X2 up in the 47.26 area for the break above the big bright red bear channel. But in another twist in the market, prices formed a late June to date descending wedge pattern, currently at 35.80 to 37.94, and that's highlighted also in bright red, as the broken upper bear channel line makes up the lower trend line in the new pattern, and I drew a simple early July to date downtrend in bright red above to make the upper downtrend. In effect, the earlier ascending expanding wedge pattern has morphed into a descending wedge pattern. However, this pattern is in turn now being tested on the top side. So for now, I'll still keep those top side targets at X and X2, as I'm starting to wonder if the whole start of June to-date action might be a bullish halfway hesitation in construction for an opportunity to look again at those topside targets. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.